Welcome back. This is trade breakdown number 8. Like always, I will break down all the trades I'm taking during the week. All right. So the first trade was this one on gold. Late entry, right? It was not the perfect entry. That was late. But my bias was right. That's why I took it. So I will explain all the confluences. So first thing first, 4 hour CRT, which is this one. All right. Bearish order flow. So my drawn liquidity was down here. All right. It was this weekly CRT, right? So if you see here, there's the turtle soup right here. And then my drawn liquidity was the CRT low. All right. And if we look at the 4 hour structure, it was clearly bearish, right? If you go back to the video I did, this one, in this video, I explaining why the order flow was still bearish for me. Okay, so bearish order flow, making lower highs and lower lows, right? Key time. So key time, if we go down here, 8 a.m. New York session, right? Right here, market open, New York open, sorry, at 7 a.m. We was on top of the CRT, which is a key time for me. All right. So key time 0.382 Fibonacci level. And why did I took this level on this particular day, which was Monday? Let me show you guys. So I took this expansion leg, right? So if we go here and we taking out the high and the low, and if we go here, it was at this level, right? And why did I took this level? Because first thing first, Monday. First, I thought that Monday will be a ranging day, right? Which is this confluence. Okay, I thought it's gonna be like a ranging day. Okay, and why did I took this level instead of the equilibrium? Because when the trend is strong, this level is most likely going to be respected. It was perfectly aligned with the CRT high. Look on the pip, like all lined up. All right. What we did during Tokyo and London, if we go here, range, range, we turtle souped the London high. And if we consider that this level is respected when when the trend is strong, that means that most likely is going to be respected if we mix up this level with order confluences, then for me it's valid, right? So that's why I took this level. So Fibonacci, open, high, low, close. So if we go here, here, so for me, Monday, I thought it was going to be a ranging day, okay? That means that I thought that it was going to be the high of the day. Because look, this is the open, right? We turtle soup this one. So low, range, range, range. For me, it was the high of the day because when you mix it up with all my confluences, it's making sense, right? So I thought it was going to be like a choppy day like this, and then Monday we was going to be like higher, and then FOMC straight dump. That's what I thought. Okay, ranging day, open idle. Okay, so 1 hour high probability order block, which is this one. Okay, why it's a high probability order block? Because it creating some liquidity. And how I know that? It's when a order block is forming inside a key level. So look, this is a key level, a fair value gap, and then the order block forms inside it, inside of the order block, right? This is a beautiful order block. So if we go here, that was the key level. So CRT high, key time, order block, zero point 0.3 Fibonacci, high of the day. I took out this trade. Now, the thing is, my late entry, I will explain it to you. Okay, I wasn't looking at the chart when these moves occurs. The perfect entry for me. So first of all, this is a 4 hour CRT, right? But there's no like 4 hour there's no 4 hour key levels. For me, the best key level was at the 1 hour. So for me, the perfect entry was at the 5 minute, right? And for me, that was the perfect entry. Right at 7 a.m., we formed a order block right here on the 5 minute. We tapped out on it, and then price start to be choppy a little bit. What that means is range plus key level equals expansion. All right. And then when I look at the chart, we was there. Like we did this big move. So I was like, okay, I'm just gonna wait for retracement and then I will open the trade. My target was the CRT low. So I wanted at least a 1.5 risk to reward. So when I go here, I was like, okay, if my target is here and my stop loss is here, then my entry needs to be here, right? So I enter in the trade right here. All right. And if we go on the 15 minute, this is a order block right here. So I was like, okay, I'm just gonna wait for the price to tap inside this one and then I will enter in because the bias for me we was bearish and all the confluences was making sense to me. But the real entry was there, right? So I took out this trade and then price absolutely smashed. my take profit right there. So here we go. Now for the rest of the week, obviously I was looking for a ranging day, and then um, Tuesday a push to the equilibrium. So I was looking for a beautiful trade, but price just falls off during the rest of the week. Just falls, falls, falls. So technically, that was the the perfect entry for the week. But my confidence wasn't high enough, so that's why I didn't hold straight into the drawn liquidity. So this is it for this trade, guys.